Professor, welcome. Good to have you with us. Let's have you explain quickly, if you would, what you mean by the urban doom loop. And it's not just commercial real estate or office buildings. It has a metastasizing effect throughout neighborhoods and communities.
Yeah, that's right. But the problem does start with the office demand, right? And we've seen with the advent of remote work and hybrid work a dramatic reduction in office demand over these past 3 years that has led to rising vacancy rates and, in fact, to all-time high vacancy rates in the office market right now. And that does put downward pressure on the valuations of these offices. You mentioned that they're down, probably 20, 30% already. They're likely to fall by more. And that causes downward pressure on property tax revenues, because for a lot of cities, office tax revenues is a big chunk of their tax revenues, often as much as 50%. Some of that is coming from office, maybe 20%. So maybe 10% of overall tax revenues for cities comes from office. If those offices lose about half of their value, tax revenues fall, and that creates a huge hole in the budget. Now, the governments have, yes, go ahead.
So the transaction prices of office buildings has declined very markedly. Am I correct on that? And that's number one. And number two, is this a phenomenon that is affecting more the biggest of the big cities, the Washingtons, the LAs, the Chicagos, or is it more pronounced in, say, what I'll call the medium tier big cities, a Milwaukee, a Columbus? You know what I'm driving at.
Yeah, this is a national phenomenon. In fact, it's arguably an international phenomenon. But within the U.S., I think the cities that are most severely affected are the cities in the West, San Francisco, Seattle, but also medium-sized cities, cities like Minneapolis, for example, right? The problem that these smaller cities have is that often there's not a whole lot of other things that these cities have to offer in their downtown areas besides the commercial office district. And when that office district starts to falter, it sort of affects the entire city. Places like New York City, at least, sort of have more amenities, they have more culture, they have more restaurants, so they have other things to offer to their local population, and that sort of keeps them attractive, even in the wake of some of these rising vacancies.
Stijn, we could say that New York is an outlier, or we could say it's a preview of what's to come. I mean, maybe the rest of the urban core, and this is the best case scenario. Obviously, we don't want to see the worst case kind of metastasize, but in the best case scenario, people are in the city for other reasons, more residential, more, experiential oriented.
That's right. And I think sort of this is the work and play, not just the emphasis on the work, but also on the and play. And I think our cities will have to evolve to be more of that, provide more entertainment value, maybe more tourism. I think that's sort of the city of the future, cities that are less oriented towards work, more towards entertainment.
What is the picture of the debt that office owners owe to lenders, and how soon is that debt coming due, and what is that likely to mean?
That's a tremendously important question. There is about, by lots of folks' calculations, about $600 billion of office debt that's potentially in trouble. A lot of that debt is sitting on banks' balance sheets. Banks have about a 60% of commercial real estate debt on their books. And, for some banks, this is a material part of their book of business. And so to the extent that we see large declines in property values, some of that debt is going to get impaired and is going to have to be written down, and it will sort of erode the equity of some of these banks that are particularly exposed to commercial debt. So that could potentially be sort of an additional spillover mechanism, another doom loop, if you want, where these local banks that are now have less resources to make local business lending. You get a local credit crunch, and it sort of drags the local economy down further.
Professor Van Nieuwerburgh, thank you very much. I know we'll have you back again soon to talk about this, because this is a really critical problem in so many cities across the country. Thank you very much, Stijn Van Nieuwerburgh of Columbia's Business School.